Few companies in the aerospace world embody national pride like Embraer does for Brazil. Founded in 1969, Embraer rose from a state-backed venture to one of the largest aircraft manufacturers globally, known for its regional jets and executive aircraft that compete with long-standing Western giants. However, in the late 2010s, faced with shifting market forces and the competitive pressures of new programs, Embraer entered talks with Boeing, one of the world's aerospace titan, on a transformative merger-like partnership. It was a move that sparked excitement among industry observers, apprehension among Brazilian stakeholders, and ultimately culminated in a contentious collapse that left Embraer navigating a complex post-breakup reality. Below, we explore the story of how Embraer evolved into a global powerhouse, what led it to negotiate with Boeing, and why the deal fell apart, leaving each side to grapple with its consequences. Embraer, short for Empresa Brasileira de Aeronáutica, was established in 1969 by the Brazilian government to spur the country's aviation industry. At that time, Brazil was undergoing a phase of industrial expansion, and officials recognized that aerospace could become a symbol of technological progress. Initially, Embraer focused on military trainers like the EMB-110 Bandeirante, though it also ventured into small passenger and agriculture aircraft. The company's success in manufacturing robust, cost-effective planes paved the way for further innovations in both military and civil aviation. By the 1990s, Brazil's broader economic reforms aimed at reducing state involvement led to the privatization of Embraer in 1994. Under private ownership, the company intensified research, restructured its business strategy, and set its sights on international markets. This era gave birth to the ERJ-145 family, regional jets that quickly found favor with airlines needing efficient short to medium-haul connections. Embraer's approach to design emphasized reliability, passenger comfort, and competitive costs, helping the company stand out in a market long dominated by players like Bombardier, in regional jets, Boeing, and Airbus, in large jets. As Embraer's commercial aircraft gained traction, the firm also expanded its executive jet segment, debuting models such as the Legacy and Phenom line. Military projects continued as well, most notably the EMB-314 Super Tucano, a light attack and training aircraft that achieved global sales. By the mid-2000s, Embraer had become an undeniable force in global aviation, renowned for bridging the gap between small regional planes and large commercial jets. Entering the 2010s, Embraer faced new competition. Bombardier was pushing its C-Series program, an advanced, fuel-efficient narrow-body aiming to compete partially in Embraer's regional market while also challenging Boeing and Airbus on smaller mainline routes. Meanwhile, Russian and Chinese manufacturers, notably Comac, signaled aspirations to penetrate regional segments. As airline customers demanded modern, eco-friendly jets with next-generation avionics, manufacturers found themselves in a race to enhance existing models or launch entirely new aircraft families. Embraer responded with the E-Jets E2 family, an improved generation of its popular E-Jets featuring new engine, updated aerodynamics, and modernized cabin. Launched in 2013, the E2 program was well received by airlines but also entailed significant development costs and technological risks. Embraer's leadership recognized that sustained R&D investments would be critical to meet the rising bar of efficiency and performance demanded by airlines worldwide. Over on the larger narrow-body side, Airbus and Boeing were proceeding with re-engined versions of their single-aisle workhorses, the A320neo and 737 MAX, respectively. These moves consolidated the duopoly at the higher end of commercial aviation, making it tougher for smaller manufacturers to edge in. Meanwhile, in 2017, Airbus took a controlling stake in Bombardier's C-Series, renaming it the A220. This effectively placed Bombardier's marquee jet under Airbus's expansive sales and support umbrella, something that many believed would up the pressure on Embraer. If Airbus was now aligned with Bombardier, how might Embraer remain competitive as a regional specialist going forward? The tie-up between Airbus and Bombardier made waves across the aviation sector, prompting Boeing to examine options for strengthening its position in the lower end of the commercial jet market, the 70 to 150-seat segment. Boeing's portfolio largely centered around the 737 family, often too large to fill Embraer's niche. As Airbus moved to incorporate the A220 as its smallest narrow-body, Boeing risked ceding valuable territory to its main rival. From Embraer's perspective, joining forces with Boeing could open avenues, shared technology, a broader global support network, and resources for new aircraft development. Boeing's sales and marketing machine, especially in the United States, might significantly boost Embraer's already decent reach. Moreover, both companies had complementary product lines with minimal overlap, making the logic of synergy plausible. By late 2017, Boeing and Embraer were reported to be in exploratory talks. Negotiations led to a proposed structure under which Boeing would take majority ownership, 80% stake, of Embraer's commercial aviation division in a joint venture valued at roughly $4.2 billion. Embraer's executive and defense units would remain separate, preserving Brazil's interests in military projects. The new JV, to be headquartered in Brazil, would handle Embraer's commercial aircraft lines, rebranded as Boeing models or co-branded, and leverage Boeing's expansive global resources. Brazil's government initially expressed reservation, given Embraer's strategic role in national defense and pride. Yet the plan included safeguards that Brazil would retain a golden share, ensuring veto power over sensitive defense matters. Embraer's shareholders, intrigued by the potential windfall and expanded opportunities, signaled cautious support, culminating in a formal signing of agreements by early 2019. Back in Brazil, various voices criticized the prospect of ceding control of Embraer's commercial aviation to a U.S. giant. Labor unions feared layoffs or offshoring of production, while politicians questioned the wisdom of letting Boeing overshadow a proud national champion. Executives tried to reassure stakeholders that the JV would preserve engineering talent and even broaden career possibilities if the combined entity grew internationally. However, critics remained unconvinced. Some called it a sellout, reminiscent of how Canada's Bombardier effectively ended up under Airbus's wing. Others pointed out that Embraer's commercial success was the result of decades of taxpayer support and that the government's golden share might not suffice to protect Brazil's broader industrial interests long-term. In the international stage, the planned JV faced scrutiny from antitrust regulators in various jurisdictions, the European Union, the United States, and beyond. Officials wanted to ensure that merging Boeing's and Embraer's commercial assets wouldn't unfairly constrain competition in the smaller jet category. Most observers expected eventual approval, though some predicted conditions or concessions might be imposed. As 2019 advanced, the EU took longer than anticipated to evaluate the deal, prolonging uncertainty. Meanwhile, Airbus pressed forward with the A220 program, capturing orders from airlines looking for modern 100 to 150-seat jets. Boeing's 737 MAX, which faced a worldwide grounding starting in March 2019 due to safety incidents, placed additional strain on Boeing's finances and public image. The environment around Boeing turned abruptly turbulent, affecting not just its large aircraft business but also overshadowing the strategic rationale behind the Embraer JV. By early 2020, the 737 MAX crisis had significantly dented Boeing's balance sheet, forcing the company to reserve billions for settlements, production slowdowns, and compensation to airlines. This, in turn, reduced Boeing's appetite for massive new expenditures, even on deals that might be strategically beneficial long-term. Then came the COVID-19 pandemic, decimating global air travel demand. Airlines halted aircraft deliveries, airline stocks plunged, and orders for new planes were postponed or canceled. Boeing's own financial position deteriorated swiftly as it contended with the MAX grounding and the broader meltdown in commercial aviation. In April 2020, amid the pandemic's peak disruption, Boeing abruptly announced it was terminating the Embraer joint venture agreement, claiming that Embraer failed to meet certain conditions. Embraer retorted that Boeing manufactured reasons to walk away, citing Boeing's financial stress and desire to avoid further liabilities. The breakup was acrimonious, with each side threatening legal action. However, neither parted with optimism. Embraer lost a prospective major partner that might have boosted its E2 sales, and Boeing lost what many had called a crucial strategic foothold in smaller jets. Embraer's stock plummeted, and the company found itself alone amid the worst crisis in aviation history. Reeling from cancelled airline orders, it scrambled to reduce costs, enact layoffs, and preserve liquidity. Meanwhile, Boeing faced its own battles, including recapitalization attempts, workforce reductions, and a slow path toward returning the 737 MAX to service. Left at the altar, Embraer embarked on a restructuring plan known as the Embraer Transformation. The goal was to streamline operations, maintain focus on profitable niches, executive jets and defense, and sustain the commercial E2 line despite weaker demand during the pandemic. Part of the plan involved shifting leadership and re-evaluating R&D programs. Embraer also pursued smaller partnerships, such as potential collaborations on eVTOL, electric vertical takeoff and landing, aircraft with new companies like Eve, aiming to tap into the nascent urban air mobility market. Financially, Embraer sought new credit lines, renegotiated existing debts, and secured government-backed support in some cases. By late 2021, signs of a slow recovery emerged. Commercial aviation orders were creeping back as airlines updated fleets for a post-pandemic environment, while the executive jet market remained relatively resilient, buoyed by business travel shifts. As for Boeing, it turned inward to resolve its 737 MAX crisis, secure approvals from global regulators, and restore the confidence of customers and the flying public. While the termination of the Embraer JV freed Boeing from immediate financial obligation, it also meant ceding the 100 to 150-seat market to Airbus's A220, which continued logging new orders, especially as airlines sought more flexible fleets post-pandemic. Boeing faced calls from airline customers to develop a new mid-market aircraft, but the pandemic made big R&D commitments more difficult. In public commentary, Boeing executives reiterated that despite the Embraer deal's collapse, they remained open to future partnerships or acquisitions. Yet the fiasco underscored broader troubles at Boeing, highlighting organizational short-sightedness and an overextended pursuit of synergy under uncertain conditions. From a purely strategic standpoint, many analysts still believe that aligning Boeing's marketing muscle and Embraer's well-regarded regional jets made sense in a stable world. The A220 success story suggests that a strong, fully integrated small jet program can carve out a profitable market niche. Boeing's abrupt departure, however, indicates that near-term financial pressures overwhelmed the long-term vision. The 737 MAX grounding, combined with the COVID-19 crisis, likely extinguished Boeing's appetite to finalize a multi-billion-dollar JV. Embraer, though disappointed, may have also underestimated the fragility of Boeing's dedication when external shocks emerged. In Brazil, the demise of the deal reignited debates over Embraer's future as a national champion. Some saw relief that the brand avoided being subsumed by Boeing, allowing it to continue an independent path that could safeguard engineering jobs and domestic technological advancement. Others lamented the missed chance for deeper integration into a global aerospace giant, believing that an alliance might have secured long-term viability. Ultimately, the failed Boeing-Embraer story exemplifies the tension between national industrial policy, protecting strategic industries from foreign takeover, and the realities of a global marketplace that demands scale and synergy. For Embraer, balancing these interests remains key. The company must compete globally without losing sight of local R&D capabilities crucial to national security and economic ambition. The pandemic's role in torpedoing the JV also underscores how mergers and acquisitions are not immune to external forces. Negotiations may assume stable or predictable conditions that vanish overnight when a global crisis hits. While force majeure clauses and deal contingencies often exist, the Boeing-Embraer saga shows that if circumstances shift drastically enough, either party can find legal justification, or at least impetus, to exit. Embraer continues to promote the E2 series, highlighting fuel efficiency, performance, and passenger comfort. With a focus on the regional segment and smaller mainline routes, 70 to 146 seat capacity, the E2 competes directly with the Airbus A220. Questions linger about whether Embraer can maintain the R&D and marketing resources to challenge Airbus's broader network. Orders are gradually recovering, but the real test will be whether major global carriers commit to the E2 in large numbers. Embraer's defense division, anchored by the C-390 Millennium transport aircraft and the Super Tucano, remains a critical pillar, attracting interest from multiple countries for airlift, search and rescue, and tactical mission. Meanwhile, the executive jet market, buoyed by corporate travel and private leisure, has often shown resilience during economic volatility. Embraer's Phenom and Praetor lines hold strong reputation, offering cutting-edge avionics and cabin comfort. Thus, diversification across these sectors may help Embraer mitigate the ups and downs in commercial aviation. One of the most intriguing paths for Embraer lies in eVTOLs and advanced urban mobility. The spin-off enterprise Eve has gained traction, partnering with companies like Uber Air to conceptualize flying taxi. Should the eVTOL market mature, Embraer's aviation know-how could position it to become a key player in a sector that merges aerospace, urban planning, and software-driven operation. While smaller than some mega-mergers, the Boeing-Embraer near alliance will be remembered as a telling example of how external shocks, market recession, global health crises, or company-specific catastrophes can derail even the most carefully planned deals. It also showcases the continuing duopolistic forces in large commercial aviation, Airbus versus Boeing, and the difficulties smaller players face unless they align with those giants. The fiasco highlights the delicate interplay between national sovereignty, corporate culture, and strategic synergy in cross-border deals. Even if a deal addresses complementary product lines, it's vulnerable if the political environment or financial climate changes drastically. Rigorous planning, robust contractual obligations, and ongoing diplomatic communication are vital to weather unforeseen disruption. Despite everything, Embraer remains a respected brand in the aerospace industry, synonymous with well-engineered jets, reliability, and innovative design. The collapse of the Boeing agreement tarnished no core competency of Embraer itself. Rather, it underscored the challenges of forging partnerships in uncertain times. As the aviation sector gradually recovers from the pandemic, Embraer stands poised to chart its own course. Leaner, perhaps, but still armed with the talent and engineering tradition that propelled it from a small Brazilian factory to an international juggernaut. The saga of Embraer and its negotiations with Boeing serves as a microcosm of how industrial strategy, global competition, and unforeseen crises converge. From Embraer's rise as a state-backed initiative to become a symbol of Brazilian aerospace capability, to the precarious 21st-century environment that led to a near merger with Boeing, the storyline is rife with twists. The proposed joint venture appeared, at one point, to to herald a new era, perhaps the ultimate synergy bridging regional and large-scale commercial aircraft. Yet the advent of the 737 MAX grounding and the global COVID-19 pandemic dramatically altered Boeing's calculus, unraveling the deal and setting both companies on separate, more challenging paths. For Embraer, the immediate aftermath was painful, but it also revealed a resilience born of decades of adaptation and innovation. Freed from Boeing's shadow, Embraer is redefining itself, embracing smaller commercial segments, executive jets, defense contracts, and even futuristic eVTOLs. For Boeing, the lost opportunity to integrate Embraer's well-regarded jets leaves a potential gap in its lower-capacity product range, even as Airbus secures a strong foothold with the A220. Time will tell whether the two firms find other ways to collaborate or if Embraer, confident in its independence, remains separate. Regardless, the Boeing-Embraer negotiation stands as a stark reminder that in global aerospace, alliances are often necessary yet never guaranteed. External shocks can upend the best-laid plans, and national identity, particularly in a strategic, high-tech industry, can sway the fate of multinational agreements. Embraer emerged from the storm battered but unbroken, forging ahead to chart its next chapter in a fiercely competitive sky.